Hello, everyone. Good morning from this part of the world. It's 9:39 p.m. a.m. West African time. And for those of you who are tuning in from a different time zone, I also want to wish you a good afternoon and good evening. I'm so excited as always to welcome you all to yet another promising edition of our Forex Morning Mastery, where we are going to be taking a deep dive into the market dynamics as we prepare for the second half of the week. Well, this week so far has been quite interesting. Remember, we are monitoring three financial instruments, which includes the US All Spot, the GBPUSD, and of course, my favorite, the XAUUSD. And we've done fairly well across board. My US All Spot trade hit TP target yesterday. Thank goodness. The GBPUSD still struggles. The XAUUSD too has been snapping back into entry point. And of course, if you had looked at the current market landscape, you will see that the dynamics collectively explains the character of market participants ahead of the major event, from the geopolitical tensions from the Middle East to the resilient U.S. economy, where we saw a strong U.S. labor market from the JOLTS report. And of course, we also had some dovish outlook from the Federal Reserve, all of which are influencing this asset one way or the other. So today we are going to be delving deep into this market today, looking at things from both technical and fundamental perspective, with the utmost intent of understanding the behavioral patterns of market participants and using that information to strategically position ourselves for the next move. And for those who are joining us for the first time, you are welcome. This is the Forex Morning Mastery, which we run 3 times in a week: Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. So this is not a signal service platform. It's an educational avenue where we all come together to become a better trader, understanding the behavioral patterns of market participants through the lens of price action and fundamental analysis. So you are highly welcome on board. Very glad to have you around with us. And feel free to engage in the comment section. I'm here, willing to be of help in that regard. And for everyone in the house, please do not forget to give that video a thumbs up. This is one way you are actually helping the community. So the more likes tally with the number of people on board, the higher the chances that the algorithm will push this video to a wider audience of traders who may find this content beneficial to them too. So with that being said, here we will be diving right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for today. Of course, we are also going to be looking at what has been going on in the last couple of days. And by looking at the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now, for the assets we're monitoring this week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Usually we focus on high impactful event, except for days where there are no high impactful event, then we can take into consideration mid-tier economic features. Now, for this week, on Monday, we were looking at the ISM manufacturing PMI, a data that really informs us the health and performance of the manufacturing sector in the United States. And the Purchase Managers Index has a range of 0 to 100, where anything below 50 is considered as a contraction, and anything above 50 is considered as an expansion in that sector. And of course, we did emphasize how the manufacturing sector has been struggling in the United States in the last 4, 5, 6 months now, consistently recording a below 50 mark situation. And of course, as at the beginning of the week, we were looking forward to a 47.5, which was what economists and market participants were projecting. And the actual data came in higher than the consensus. In fact, it even came in higher than the previous month data. And what does this tell us in simple terms? It informs us that the manufacturing sector in the United States is growing, is improving. At least the data was higher than the previous month, which is a positive signal, though it's still below the 50 mark. And of course, the market had also taken advantage of this development to favor the US dollar in one way. Then we also had Fed speeches, Fed official speeches. We had Bostic, we had Waller, and then Williams that day too as well. And they were able to, from the major highlights collectively, they did emphasize that inflation is still there and that the chances of cutting interest rate next month is still also there. But they didn't really mention anything about the expectations of the Donald Trump administration and how it's going to influence their monetary policy, which is something I was willing to listen to and see what their thought is. So that was that as regards to the Fed speeches. Then yesterday we were looking at two events from yesterday, that is Tuesday, December 3rd. We were looking at the BRC like-for-like retail sales data from the United Kingdom, a data that gives us an insight into the retail sector of the United Kingdom. And of course, it wasn't an impressive one, as we saw here. The actual data came in at a deficit of 3.4%, which was way below what market participants were expecting, and of course way below the previous month data, which was pegged at 0.3%. So with a 3.4% contraction in the retail sector, this is a very this is a red flag actually, and a sign that the consumers are not spending money, and this is showing that consumers are not feeling confident in the UK economy at this point, so they rather want to keep their money than to spend it, which is not a very good signal at all. Then on that same day, we were looking at the JOLTS job openings, a labor-oriented data, which gives an insight into the job vacancies in the United States. And of course, if the data comes in higher than market had expected, it's a positive signal. And of course, we saw a 7.744 million for the month of October, which was way higher than what market participants were expecting, and of course higher than the previous month. So this is a sign that the labor sector is doing very well. We have a resilient US economy at this point in time, and of course it's expected to favor the US dollar. So looking forward to the second half of the week. Today, Wednesday, December 4th, we are looking forward to a bunch of high impactful events from the UK and from the United States. First of all, in about 12 minutes from now, the Bank of England governor is going to be speaking, and I'm not really expecting anything significant from that event actually, as it's a pre-recorded interview from the Bank of England, and is not expected to provide any significant market moving insights, leaving traders with minimal UK related catalysts to bank on ahead of today's trading session. So this is coming up in about 11 minutes from now, right there, as you will see. Then in about 4 or 5 hours from now, that's 1:15 p.m. UTC, we shall be looking forward to the ADP employment change from the United States Economic Docket. And for those of you who don't know, this is actually a monthly economic report that provides the number of new jobs added in the US private sector. And it also previews the official job report, and strong numbers can actually boost the US dollar as they signal a healthy economy, while weak numbers might put pressure on the US dollar by suggesting slower growth in the US economy. Now, if we look at what the previous month says here, we have a 233,000, and then we see economists projecting 150,000 for the month of November. Well, from what is on ground, it appears that things are not looking rosy in that perspective, considering the figures that they are projecting. And if we compare that to the previous month, well, it's not something too good. But we still look forward to see what the actual data is going to be like. Will it be just as what market participants had anticipated, below it, or even beyond all expectations? So this is one event we're also going to be looking forward to today. Then besides this, we are also going to be looking at the ISM Services PMI. This is a report that gives us an insight into the service sector of the United States, how healthy, how performing it was in the last 30 days. And it's a purchase managers index. And like I did say earlier, it ranges between 0 to 100, where anything below 50 is considered as a contraction, and anything above 50 is considered as an expansion. And of course, the service sector has been resilient consistently in the last 6 months, I think, if my memory serves me right. And we still expect to see something positive from the service sector for this month. But if you look at the data here, based on what economists and market participants are projecting here, they are looking forward to a 55.5, though it's higher than the 50 mark, but a little bit lower than the previous month, which is pegged at 56, as you will see here. So we look forward to see what the actual data will be. Of course, if the data comes in higher than expected, we are likely going to see some positive traction in favor of the US dollar. And if it comes in below, then this might not be a good news for the US dollar. So we want to be marking our timing out on that one. That's 3 p.m. UTC today. That's 4 p.m. local time. Then we are also going to be looking forward to the Fed chairman speech today. That's about 6:45 p.m. UTC. And of course, everyone definitely will be looking forward to this event, especially as market look forward to the NFP report coming in on Friday. And of course, his remarks will provide insights into the bank's monetary policy stance, economic outlook, and potential future policy action. And of course, the anticipation of this speech can significantly impact the sentiment in the market, as traders and investors will closely be analyzing his rhetorics for clues about future policy direction. And in fact, as a result of this expectation, we may likely see extended sideways trading activity today. And market major key players will not be making any aggressive bets or decisions until this event comes up. So we're also going to be taking this into account while we review the current market dynamics. And then we also have a couple of speech from Beach. Beach Book is a financial program in the United States. And we also have Mary Daly's speech coming in about 11 p.m. UTC. So this is what we will be looking forward to today. So how many? Okay, we are looking at 1, the Bank of England's pre-recorded speech. We have the ADP employment change, that's 2. Then we have the ISM service PMI 3. Then the Fed chairman speech 4. 4 major events to look forward to today. So I do encourage us all to mark out this timing. Now, I will always reiterate this all over again. Major key players in the market, of course, do have insiders in this department that will be releasing this report. And due to this first-hand information, they are ahead of the game, and they will likely be positioning themselves ahead of the event, which will reflect on the chart as structural patterns that we can actually use to capitalize on the next move. Now, before we go into the chart, let's talk about tomorrow's economic event, since we are not going to be running the Forex Money Mastery tomorrow, so that we can know what to look out for to guide decisions tomorrow. So tomorrow we are going to be expecting the OPEC Plus meeting. Remember, this was postponed. It was supposed to happen, I think, at the beginning of the month or the last day of last month. It was postponed, and this had resulted in a choppy market condition throughout last week, as market participants were not sure of what is likely going to be happening. So finally, the meeting is going to be coming up tomorrow. That's 8 a.m. UTC, 9 a.m. Local time. So it's an event everyone will definitely want to be looking forward to. It has caused a lot of uncertainty in the market. And of course, we saw some positive traction yesterday, which came to me as a surprise, actually. And the expectation surrounding the OPEC Plus is that there might likely be a delay in plans to increase production for another 3 months thereabout, which is something that, of course, triggered that bullish momentum we saw in the USOILSPOT yesterday. So we look forward to see what that is going to be like if the market had already priced in this expectation into the market. Then again, we will be looking at the initial jobless claim count. I always like to look forward to this one, as it gives us a very good insight into how the labor sector is doing in the United States. It measures the number of people filing for first-time claims for state unemployment insurances. Now, if the figure comes in higher than what market participants are expecting, it's going to reflect negatively on the US economy, and this, of course, will dovetail to a negative traction for the US dollar. But if the data comes in higher, that will be a positive signal. Lower, and that will be a positive signal, and this could influence the US dollar positively. So that's 1:30 a.m. PM UTC tomorrow afternoon. Then we're also going to be listening to Megan Green, who is also a member of the Monetary Policy Committee of the United Kingdom, that is the Bank of England. She's going to be giving a speech tomorrow. That's 5 p.m. UTC tomorrow. So we also want to be looking at that. So the OPEC Plus meeting, the initial jobless claim count, and of course the Bank of England's Megan Green's speech coming up tomorrow is one event to look out for before those major events on Friday. In fact, I'm really anticipating that Friday's trading session. We are likely going to be seeing some high level of volatility on that one. But pending that time, let's see what is going on in the market today, and how, since the beginning of the week, and how we will be preparing for today's trading session. So I see you in the comments, Adeni Babalola. Good morning to you. Happy to have you around. C40, I see you too. Good morning to you too. So with that said, we will be diving right into the business. So as usual, the first asset we are going to be taking on this morning is the USOILSPOT. And after a couple of losses at the beginning of the week, we were able to recoup the losses incurred, and of course made some significant amount of profit on top of it. Now, for educational purposes, let's pause and rewind back to the beginning of the week and what we saw here that led to the decisions we made. Now, first of all, I would like to call our attention to the 4 hours time frame, which was the foundation upon which this decision was made. Now, if you remember vividly, for those of you who are part of this session on Monday, we spotted this beautiful descending trend line which had played a significant role in determining the direction of price action since about on the 11th of November. That was last month. And look at what has happened. Look at what happened here. We saw how it was a selling niche at some point. Price broke down, retest the structure. A couple of choppy market conditions happened during the mid-month of November, leading to the breakout of that descending trend line. And ever since that breakout happened, sellers have been finding it difficult to break through as the trend line continued to serve as a demand zone, pushing price to the upside. And due to this fact, we were keen, or we were leaning towards looking out for structural details that will support buying ideas in this market. And in addition to that, trend line was our key level situated at the $68 area, as you will see here, serving as a yardstick guiding our trading decisions for this week. And you know how we use our key levels. As long as price remains above the key level, we definitely want to be looking out for patterns and structures that supports the idea of buying. And except this key level is broken to the downside, can we start considering selling? Now, after seeing that price action was around our important confluence here, scaling down into our execution time frame, we were able to identify a range bound structure during the first 10-12 hours of the week, as we saw price confined within the $68.70 level and that key level at the $68 area. Now, I said this on Monday that we missed out on this opportunity. This old breakout of the $68.27 area happened during the Asian session, and of course I mentioned that if price comes back into the structure, we could see an opportunity to buy again. But if that does not happen, we want to be buying the breakout of the resistance line at the $68.70 level. And of course, we saw price move about 40 pips, as you saw here, and move stop loss to break even. We got price taken out at break even at that point. And in fact, when I saw price action come back here with buy pressure on my lower time frame, I joined, and this was where I had my first loss for the week. Though price moved very well, price moved about 45 pips, but I didn't expect that to return at that point, so I didn't move my stop losses at all. And of course, we saw price drop, taken out of that position in a loss, as you will see here. Then we had a couple of breakdown retest of structure at the $68 area, which also triggered a sell position. Remember, I mentioned this on Monday that we will be looking at selling the breakdown retest of that $68 area, which lines up with that trend line we identified on the 4 hours time frame. So we had another sell position triggered there, and that one did not do very well, giving us 2 losses on the USOILSPOT. So this is where patience is very important, and secondly, the ability to stay consistent with your trading approach, irrespective of whatever the market does to you. So even if the trade is not doing very well, as long as we are following our analytical approach, that is the win for me, actually. So even if I lose financially, the fact that I'm following my analytical approach is a win for me. Now, this is where risk management comes in. So if you had risked too much of your portfolio, or you have risked an amount that affect or influence your emotions negatively, you might not be willing to continue to take advantage of the opportunity your trading approach gives to you. So for me, I have my own risk appetite, and I've mentioned this before. Your risk appetite is subjective. what is you count a risk might not be a risk to another person. So if for you, $5 might be a risk that you could manage. So for some people, $500 can be a risk that they can manage. So that's where becomes subjective. So if you are having a well-defined risk management approach, you will consistently be able to capitalize on the opportunity your trading approach brings to you. So we had 2 losses at the beginning of the week, but we were able to capitalize on this breakout retest of the 68,275 level. I updated us yesterday morning on my Telegram platform of this setup, and of course we did say we will be adding another buy position at the breakout retest of the $68.70 level, a very crucial area which also shares a confluence with that descending trend line. And of course, if you had capitalized on this opportunity, you will be having a minimum of 2 buy positions. And of course, I had my TP target at the $70 mark, dovetailing to about 180 pips for the first buy position and about 140 pips for the second buy position. So that's roughly over 300 pips in profit. And if you net it out with the losses we incurred at the beginning of the week, we are already profitable on this particular position. And for those of us who did capitalize on this opportunity, that is, you stayed faithful to our analytical approach, well done and kudos to you. Now, with all positions closed on the USOILSPOT, I don't know if you still have a buy position still running and active at this point. If you do, I will encourage that you move all stop losses right now, secure your profit. The most appropriate area, I think, from this point is around the $69.85 level and the $69.75 area, while giving enough breathing space for price action to move around. And of course, if you had noticed in the last 17-18 hours or so, the market has been finding resistance around the $70.15 level, showing us signs that price may likely come back, might start some retracement move, which could be a reflection of profit-taking activities ahead of the Fed chairman speech coming up later today. And if we take a technical dissection of this chart, look at that descending trend line that was breached and broken yesterday. From a theoretical standpoint, it is likely that price will come back to retest the structure that was broken in anticipation of an uptrend continuation. So that is just a projection. It's not a fact yet. However, how do we intend to navigate this area today as we prepare for the second half? Now, before we go into the technical details, it's important that we also keep tabs with the fundamental drivers that is influencing the sentiment of market participants. Now, to top the list is the geopolitical tensions. Of course, we've been talking about this for over 2 to 3 years, and the ongoing Russia-Ukraine conflict and potential for further Middle East instability. In fact, despite the Hezbollah ceasefire, then we also have the Syria situation still ongoing too as well, and this continues to maintain a geopolitical risk premium supporting oil prices. So if we bank on this, the path of least resistance for oil prices still remains to the upside. But what path is it going to take? Is it going to retrace first before it continues the uptrend scenario, or it will just continue right from the point we are right now? Then another one that could also influence the uptrend scenario here is the expectations that OPEC Plus might delay plans to increase production for 3 more months, and this could help limit any downside scenario, since such a move will restrict supply into the global market. Now, in as much as the path of least resistance remains bullish, there are a variety of other fundamental factors that we need to also take into account before just jumping into any buy position we see at this point in time. Remember, we have a stronger US dollar, which makes the crude oil, which is a US dollar denominated asset, more expensive for buyers using other currencies, and this could lead to reduced demand in the market. So you might be wondering, what does this mean? Well, to simply put, since the US dollar is very expensive at this point, and then for you to buy the crude oil, you need to convert your local currency to the US dollar. So that means that if you are converting your local currency to the US dollar, you are actually buying the US dollar at an expensive price. Now, because it's expensive, this will reduce the demand for oil. So if you are planning to buy, let's say, 1,000 barrels of oil, you might want to reduce it to 500 or 400 due to the fact that it is quite expensive at this point. So this is what I simply mean, and as a result, it will reduce demand in the global market. Then we also have excuse me, market on sorry, excuse me. Then we also have the UAE production increase. There was a report from Reuters yesterday that the United Arab Emirates exceeded its agreed upon production levels. That's almost approximately 350,000 barrels per day. And this, for me, shows that there are some cracks within the OPEC Plus, creating a potential conflict. And this could lead to increased supply in the market. And this could negate any uptrend scenario in this particular market. Then we also have concerns over slowing global demand growth at the moment, and this obviously can also weigh on oil prices. But at this juncture, traders may be hesitant to make any significant move before the key US economic data coming up for today and the later part of the week. We are talking about the initial jobless claim count, the ISM services PMI, the ADP employment change, the Fed chairman's speech, the NFP report, and of course the average hourly earnings coming in on Friday. So these are major events that could change the dynamic of this market. So because of this number, we could see extended sideways trading activity happen. And of course, we begin to notice that since yesterday evening, as you will see, price culminated there and have continued to show signs that there is an indecision going on at that point in time. Now, as it is right now, you will agree that this whole scenario is giving us a counterbalance. So how are the markets going to digest this information, and how will they be anticipating this economic event coming up today? Now, if we look at the chart here, the first thing you would observe is that the market is actually consolidating here, as you will see, between the $70.20 level and the $69.80 area, emphasizing the prevailing uncertainty in this particular market. So how is the market going to run around this particular area? For us to have a clearer perspective, I have a simple structure on the 15 minutes time frame to help us navigate this market today. So will the market retrace back into the trend line, or will this all continue the uptrend from this area? And if we look at the distance between here and that trend line, we are talking about over 150 pips to catch there. So scaling down into the 15 minutes time frame, this was what I was able to come up with. So after taking into account the character of price action since the later part of the New York session yesterday, I first of all acknowledge the trend line, which is within the consolidation phase. So despite the fact that we have a consolidation, within it is a sign that buyers are showing some sign of resilience, and this resulted in this trend line you see here. Now, besides the trend line is the range bound structure, that is the $670.20 level and the $69.90 area, which emphasize the uncertainty in the market right here. Now, one thing I noticed here within this whole consolidation is an uptrend continuation pattern. You will be asking, where is that? Well, if you look at this, there's an impulsive move that got to this point, and then you see how the consolidation transitioned into an ascending triangle. And from a theoretical perspective, whenever we identify an ascending triangle, it's a sign that price is likely going to continue the uptrend move. And for us to confirm that truly this ascending trend line, ascending triangle is valid, we will need to see price break out retest of that resistant line at the $70.20 level for us to continue an uptrend move. So because of this, I already placed a buy stop order above the $70.20 area, just right there, with the hopes that price will continue the momentum. In fact, I can afford to risk a buy position there due to the leverage I already have in the market. We are profitable so far this week, so we can still test waters around that particular area. Now, stop losses will be below the trend line. That's dovetailing to about 20 to about 30 pips of stop loss on this particular one, giving enough breathing space for price action to move around. So that idea there supports the uptrend scenario. We may likely see the market favor the geopolitical risk and the production delay from the OPEC Plus to push price to the upside. But if the contrary happens here and markets begins to consider the latest report from the UAE as regards to the them exceeding the agreed production level, and of course taking into account the strong US dollar and the uncertainty ahead of the US economic data coming up later this week, we may likely see profit-taking activities happen. And if that is going to be the case, we might likely see price run through that 115 pips move we talked about on the 1 hour time frame, pushing price to the downside. Now, if I am going to be joining a bearish move, you know how we do it. Whenever we have a range bound structure, we want to see price break down, retest the support line for us to continue the downtrend move. I'm not going to be having a sell stop order here because it's an uptrend scenario, and any selling idea here is more or less a counter trend opportunity. So for me to join a sale here, I would love to see a confirmation. And what do I mean by confirmation? Once I see the signal happen, that is the breakdown of the trend of that level, I would like to see price come back to retest structure. It could be the retest of the support line here or the retest of this trend line, where signs that buyers are finding it difficult to climb back above the ascending trend line will be all I need to continue the downtrend move. So I could join that move early enough, that is, join it around this area even before the breakdown of the $89.90 level happens. That is after citing a breakdown retest of structure. Now, even before the breakdown retest happens, if this trend line here continues to be a barrier for buyers and we continue to see selling pressure right below this area, we could join a sell that's around the $70 mark, and of course have stop losses right above the resistance line at the $70.20 level. That's about 20 to 25 pips of stop loss to join that potential retracement move to the downside. And please note that this is a counter trend opportunity. So joining a counter trend opportunity means that you want to be on standby. As soon as price moves significantly in your favor, you want to be moving your stop losses, secure the positions just in case price could rally back upward, because it's a counter trend opportunity. So buy is still a buyer's territory. So this is my simple view on the USOILSPOT today. It's a very, very simple setup here on the 15 minutes time frame. We are only buying only when price action breaks out of the $70.20 level, and selling as long as selling pressure persists below both the trend line and the 69 $1.90 level. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can also take that time to mark out those levels, as they're going to be playing a significant role in guiding our trading decisions today. So stay tuned in, guys, and don't forget to give that video a thumbs up. Thank you very much. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and we can now move on to the next asset on our watch list. I hope you've marked out these levels and structures accordingly on your chart, as they will be serving as a reference point to guide our trading decisions ahead of today's US economic data. So I wish you all the best of luck on this one. So the next asset we are looking at this morning is the GBPUSD, the British pounds against the US dollar. And of course, looking at the chart here, you would see that the market has been quite choppy since the new week began, though we had a sell position triggered during the early hours of New York session. After that bearish candle we saw here, price broke down, retest that key level at the 1.2685 to trigger our first sell position for the week, and we saw price move approximately 70 pips before this old bullish traction began. And in the last 24 to 36 hours, we've had multiple buy entries, and every time we buy, you can see price keeps coming back to take us out at entry points at break even. So you see, we have been buying above the 1.26600 level, as we have illustrated during my commentary yesterday. And look at price move about 36. The second time it came back again, it moved about 38 pips, and then the third time it moved about 37 pips, still coming back into the entry point, taking us out at break even at every single point in time. So for me, this is a clear sign that there is a huge indecisiveness in this particular market, as it highlights a cautious sentiment around the GBPUSD, with traders awaiting clearer direction from the upcoming US economic data and central bank signals. Now, will this persist? Will this continue into today's trading session? Looking at the market news and the financial update this morning, there are no clear positive or negative driver for the pound sterling at this particular point in time, except for the expectations that we are looking forward to. And the ADP employment coming up today, market are expecting that there will be a lower US ADP report. Forecast for the US ADP non-farm employment, like we did say earlier, is about, let me see again. Okay, so last month it was about 233,000 and market are expecting a 150,000. Well, this expectation could favor the pound sterling in the meantime, but I don't think that anyone will want to be placing a bet in favor of the GB just basically because of a mere speculation. So it's still not clear yet. And then for the ISM services PMI, we also saw an expectation of about 55.5 as against the previous month, as you will see here. That one is also lower than the previous month. So this is another speculation that market participant may be looking at to trade around this particular area. Now, from the British pounds, the absence of any significant economic report from the UK may leave the pound sterling vulnerable to broader market trends, and of course the US dollar's performance could just take advantage of this absence of any economic report from the UK to rally for today's trading session. And though we had this Bank of England governor speech, which I did mention earlier, that it is a pre-recorded interview from the governor, and it's not expected to provide any market moving insights, leaving traders with minimal UK related catalysts to bank on for today. Then the anticipation of the Federal Reserve Chairman appearance and the US non-farm payroll data later in the week keeps the US dollar underpinned, limiting the GBPUSD's upside at this point. So if you would ask me from my own personal view, I still think that the US dollar may likely take advantage of this whole scenario to rally to the upside. And what does that mean? That means that we are going to be seeing the GBPUSD fall to the downside. Now, looking at things from a technical standpoint, let's go back to the 4 hours time frame we saw at the beginning of the week. Now, remember, when we were analyzing this market, the 4 hours time frame gave us an ascending channel, as you will see. After connecting the series of higher highs, we have the resistant line of the ascending channel. And then when we connected the series of higher lows, we have the support line of the ascending channel. Now, look at what has been going on since this week began around the support line of the ascending channel. So you can see, despite the fact that we're seeing buy pressure around this area, that is, price may likely continue that uptrend scenario, buyers are finding it difficult to really break out of the structure. In fact, this is one of the reasons why I kept on entering that buy position. But as soon as price gets into our key level at the 1.2685, you see what happens. Price continues to drop to the downside. And in the last how many hours now? In the last 3.5 hours, you will see that price action appeared to have broken down that's as the support line of the ascending channel, though we can't say it's a breakdown yet because this candle still has about 31 minutes to go. It could still turn out to be a hammer candle, which theoretically is a sign that buyers are still present in this market. So from the look of things, you would agree with me that we are at a crucial juncture, and we need to be very, very careful, exercise patience, and wait to see how market participants will be reacting to the support line of this ascending channel. Are we going to see price breakdown, retest the structure to help us join a sell, which will be favoring the US dollar, which I said earlier? My feeling says that the US dollar is going to gain some traction. The pound sterling doesn't really have any catalyst that they could bank on to make a rally. And of course, the pre-recorded speech from the Bank of England's governor, I doubt if it's going to have any major influence for the British pounds today. And from the reports we have been seeing so far from the United States this week, it has been very impressive. The manufacturing sector, though below 50, has showed some signs of improvement, and which was higher than market had expected. We also saw the which one again is that the GOLTS opening coming in very, very good at 7.744 million, and we are looking forward to another labor oriented data coming out today, which I suspect will come in positive, higher than what market had expected, and this could favor the US dollar strongly. And that means that for me, from a sentimental perspective, let me put it that way, that's a sentimental perspective, price may likely drop to the downside today. So I want to look out for structural details around this area that will support that idea. I want it to mature before I jump into that sell position. Now, please don't get me wrong here. That does not mean that I'm not open to any uptrend scenario from this particular area. Of course, we are at a crucial juncture. Of course, the support line of the ascending channel, which obviously is an area where buyers are expected to push price to the upside. Now let's look at the 1 hour time frame. Let's look at what is going on the 1 hour time frame. Can we have any structural details that could help us navigate this area today? Well, look at what is going on here. Price is still trading around the trend line. Let me shift the ascending trend line down a little further so you can capture the tip of all the pivot lows, as you will see here. Let me highlight it so you can see. We have the pivot 1 since the beginning of the week, pivot 2, we have pivot 3, and then we have the pivot 4 here still ongoing. We have about 29 minutes for this candle to close here. Now, for me, the inability of buyers to confidently break out of our key level at the 1.2685 is a real concern for me. So in that regard, I will be looking out for selling ideas around the 1.26600 level. So what this means is that I want to see price breakdown retest the 1.26600 level to join a bearish move. So breakdown would have successfully broken down that ascending trend line, that is the support line of the ascending channel, for the first time this week. Retest of structure will be beautiful enough to join a bearish move. And stop losses, well, stop losses will be right above the key level at the 1.2685. That's between 27 to about 35 pips of stop loss, depending on your account size and how much you can afford as regard to the risk you are going to be taking on your position. So selling the GBPUSD for me is looking very likely, though I'm not going to ignore the bullish potential, of course. But if I'm selling, I want to see a breakdown retest of the 1.26600 level. Of course, I will be giving us updates as we continue to monitor price action ahead of today's economic event on my Telegram platform. I will be giving a 15 minutes time frame outlook after monitoring price action around this area. Now, let's talk about the bullish expectations in this market. What are the conditions that will make me consider buying this asset right now? Well, before, I would have said above the 1.2685 since it is our key level for the week, but the fact that this area has been a strong selling niche in the last 24-48 hours, I will be very wary of joining a buy around this area because it has turned out to be a seller's niche. So for me to consider buying now, I want to see price action take out all the sell positions along the 1.2685 before considering selling. So I want to see a significant move that broke out of that structure. Then price comes back to retest at some point. Then I will start considering buying this asset. I will always update us on both my Telegram platform and TradingView platform as I continue to monitor price action around this area. So I'm looking at this 1.271, but if I see price breakouts of this zone significantly, that is, let me show you the zone I'm talking about here. This old zone here around the 1.27. So this area is a strong selling niche in the last 36 hours, 48 hours. So I want to see a significant breakout. If it happens, retest of structure will be a good confirmation for me to join an uptrend move. So that is what I'm looking at on the GBPUSD. I will definitely update us accordingly on my Telegram platform as we continue to monitor price action. So that is my simple move, my simple idea on the GBPUSD for today. I hope I made myself clear. If you have questions, feel free to let me know in the comment section. And please don't forget to give that video a thumbs up. We have over 12, 13 people on board and we only have 6 likes. Why is that? Please, let's make the like tally with the number of people on board. And thank you very much. I should do so. And for those who have also liked, thank you very much. I really do appreciate your support. So let's see if there's going to be any questions before we move on to the final asset on our watch list today. Stay tuned in. All right, guys, thank you very much for the likes. I really appreciate that. You are awesome. You are great. Thank you very much for the support, C40. All right. So in the absence of no questions, I want to at this point assume that we are all on the same page, and I do hope you marked out these levels accordingly on your chart. Like I did say earlier, from my own personal opinion, I am leaning towards a bearish move due to the strong selling niche we have been seeing so far. So we are looking at a breakdown retest of the 1.266 to join a bearish move, and I will not consider buying except that selling niche around the 1.27 and 1.269 is significantly broken to the upside. So that is that on that. I will definitely update us accordingly as we continue to monitor price action. So let's move on to the next asset on our watch list. So the final asset we are looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And just like what we saw on the GBPUSD, the same structural detail is replicating itself right here on the XAUUSD chart. As you will see here, the week started on a strong bearish note, and ever since that bullish trigger started, we kept on buying at the break of the 1.264 at every point in time as price continued to snap back into entry point. And every time price moves in our favor, we saw price move over 110 pips move, and in fact for every move there I was able to make 50 pips out of it after moving my stop losses. So we've been making profits out from the gold market in tranches, and I just hope that today or the second half of the week will give us some significant amount to catch on from this particular area. Remember, we are not considering selling yet on this particular market as price still continues to maintain momentum above our key level at the 1.26400 area. As you will see here, you know how we use our key level. We'll continue to look out for patterns and structures that support buying ideas around this area. Now, what's going on behind the scenes? Well, geopolitical tension continues to escalate. We have the persistent geopolitical tensions. The Israel-Hezbollah conflict. We also have the US-China trade war. Yes, that reminds me, China also placed some export ban on some commodities to the United States yesterday. I think President Xi announced that. And of course, the political uncertainty in South Korea increases demand for safe haven assets like gold. Then we have the remark from key Fed officials in the last couple of days, including discussions about restrictive policies and meeting by meeting rate assessment. And this obviously is continuing to add uncertainty into this market, which slightly favors the gold in one way. I strongly still feel that the path of least resistance for gold still remains to the upside. However, we cannot ignore the potentials of the US dollar too as well. Remember that we had a strong US labor market insights yesterday where we saw a robust JOLTS report. And then we have the slowing inflation, which suggests that the Fed may pause or slow rate cuts, reducing the appeal for gold, which usually serves as a hedge against inflation. And for me, the dollar could rise on this path. Then the expectations of a less dovish Fed, while some Fed officials suggested rate cuts are still possible, the overall expectation of a less aggressive easing policy continues to dampen gold prices, and a stronger dollar could emerge from this particular area. Now, as regards to inflation, I know there could be some level of how would I put it, misunderstanding around the dynamic when we are talking about a stronger labor sector, which is usually expected to result in higher interest rates. But this time around, we are talking about lower interest rate influencing the gold. While lower inflation can support gold via rate cut expectation and US dollar weakness, it is not guaranteed based on what I have seen in the market so far. Other factors like labor market strength, geopolitical risk, or even global demand trend also is going to be playing a role. Now, the narrative so far from what we've learned assumes a complex scenario where gold faces mixed influence. Inflation isn't support it, but rate cuts doubt and a stronger US dollar offset those gains. So now this makes the whole scenario a little bit complicated, and one needs to be very, very careful to take in any trading positions around this market dynamic. In as much as I still feel that the gold remains bullish, we still have a buy position already triggered already. Price is currently running with about how many pips now? About 25 pips in profit. Remember, we continue to maintain buying ideas around the 2,640 area. So as long as price remains above that area, we will continue to make buying demands from that point in time. Now, another thing that also supports this technical setup is the fact that price is still within. We have a structural detail around an ascending channel. We have the resistance line of the ascending channel right here. We have the support line of the ascending channel right here. Though we have a little bit of a breakdown of that ascending, the support line of the ascending channel right here. But will this incite a sell-off? Like I did say, we are at a critical juncture, so we need to be very, very careful. So as we have bought at the 2,640 now, we want to see how far will this momentum go. Is it going to be a retest of this structure to incite a sell-off? So what this simply means is that as this price moves, as soon as it gets into about 30-40 pips, we kindly move all stop losses, secure the position so that we can see if the market will just continue to find selling pressure to push price to the downside. So we are really in a critical juncture, a range bound structure, if you would ask me, that is between the 2,651 and the 2,640. That's about a $10-11 range bound structure. So I still maintain a bullish bias on this one, and hopefully we can see price break down the 2,651. Now let me say something here. For me to buy the 2,651 at this point, I would rather want to see a breakout retest happen on my lower time frame, that is 5, 10, 15 minutes time frame, before I jump into a buy position here, before adding more buy position. And the reason is basically simple. This area here has been a strong selling niche since the beginning of the week, though we had a breakout here, as you will see, but it didn't last long. And the last time price came here, we saw sellers come into the market. So all of this area for me is a selling niche, and if I'm willing to add more buy position above the structure, I would rather want to see price break out and then retest the structure, giving me confirmations that buyers are getting stronger before jumping into that buy position. So that is how I will be managing this position around this area. I saw your comment here, Leon. Leon says I should explain the structure in 15 minutes time frame also. Well, from this point, the 1 hour time frame here is quite enough for me to understand what is going on here. We have a hammer candle from this point, and this current candle here is showing signs that buyers are still present in this market. And if we consider the memory around the 2,640, it's more of buying power every time price comes into this area. Of course, I'm not going to be considering selling up around the 2,640. It's not possible, except I see something like price breaking down, then retest of structure where continued selling pressure persists before I jump into a sell from here. So buying at the 2,640, stop losses should be below the 2,634, and that's about 50, 60, 65 pips of stop loss on this one. Of course, we do want to be giving enough breathing space for price action to move around. So that is my simple view, but let's look at the 15 minutes time frame. I know there are some of us who are having small size accounts, and you cannot afford to have a big stop loss on your trades. Well, that is I understand that. And if we look at the 15 minutes time frame here, this is the 2,640 level, right? That's our key level. We want to continue to maintain bullish bias above the structure. So if you are a scalper, a day trader, or one who's having a small size account, you can afford big if you're buying above the 2006, at least you can have about 37-40 pips of stop loss on this one, since the lowest point around this area is here, right here at the 2006-36.50 level. So we want your stop loss to be right below the previous low. So let's be hopeful here that the bullish momentum will continue to be maintained. And please remember what I said here, that this buy position, as soon as it gets close to that trend line, that's about 50 pips of profit by that time, move your stop losses and secure the current buy position, as we do not know if selling pressure will resume at the retest of structure to incite a massive sell-off to the downside. So we continue to monitor price action around this area. Let's see what happens. And if price continues to drop and we see the 2006-36.50 breached and broken to the downside, what are our chances here? Well, we'll begin to start considering selling, but not unless the retest of the structure happens. So let me mark this one out too as well. 2006-36.50 level right there. So we have a breakdown retest of that structure that will make us join a sell. So let me indicate this here for the sake of clarity, and for those of us who would like to screenshot. So if I'm going to be selling, we'll look at the breakdown retest of the structure before considering that move to the downside. And for my go-go challengers, we shall be scalping this market together again today. 30 minutes into the New York session, I will begin the live session, and immediately after the New York session begin, I will be running a live commentary for about 30-40 minutes, answering your questions, and of course giving you real-time ideas on how we will be navigating this market from a lower time frame, as low as 1 minute time frame we will be looking at together. So I look forward to seeing you go challenge right on this platform. So that is my simple view on the XAUUSD for today. So let's see how this is going to play out today. Currently we have a buy position triggered. It's back into the entry point and struggling to gain traction. We are hopeful that it will continue the uptrend scenario, but if the market does otherwise, you know how the market does, it could change course at any point in time. Our duty, our job is to ensure that we are on standby to capitalize on whatever opportunity the market presents. And always remember, you have your risk management strategy in place. Do not risk more than what your emotions can manage. It is very, very important. When you risk as little as possible, when the trade doesn't go your way, you are willing to continue to be faithful to that trading approach. But if you risk way too much, you don't know when that move is finally going to blow. So just continue to risk as little as possible. Continue to keep trying. Look at what happened on the USOILSPOT yesterday. On Monday, we had 2 losses, but we kept on with that trading approach, and finally it paid off. We recouped the loss and, of course, made some more profit on top of it. So this is where consistency plays its role. You are very much welcome, Leon. So I want to look forward to the comment section. Are there any questions as regards to the XAUUSD or any of the assets we talked about today? If you do have, feel free to drop them in the comment section. I am here and willing to be of help in that regard. So I will take the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. Good morning. All right. So, in the absence of no questions, I guess we are at the end of the Forex Morning Mastery. Thank you very much for your support. I really appreciate it. Though we are yet to hit the 13 people mark, we have over 13 people on board and we only have 9 likes. So there are some of us in the house who are yet to click on that like button. Please do support the community by clicking on that button. The more likes we have, the better the chances for the algorithm to push our video to a wider audience. And for those of you who had liked already, thank you very much. I really do appreciate your support. Now, today we were able to take on the assets we are monitoring for this week: the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setups that will help us navigate this market today. And we were able to have some insight into the sentiment, the factors driving the sentiment in this market. And of course, this will also help us in making our own independent trading decisions based on this information you have gathered. And I do hope it helped a lot. If it did, continue to support the channel. Just click on that like button and thank you as you do so. And I hope you were able to mark out all the levels we identified today. If you did, well done to you. So all we need to do right now is just keep calm, chill out, exercise patience, and let's allow the structures to mature. And always remember, like I did say earlier, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place. And for those who are joining me for the first time, you're highly welcome on board. I hope you have clicked on the subscribe button, as there is a lot for you to gain from this channel, from our Forex market prep on Sundays, to the Forex Morning Mastery, and of course, my trading ideas during the weekend. I usually share them here, and I look forward to seeing more of you. So if you're getting a lot from this session, I look forward to seeing more of you. The next session is on Friday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for the last trading day, which promises to be another exciting one as market participants round up their trading activity for the week. And of course, the anticipation of the almighty NFP report is one other event that could bring some huge liquidity into the market. So we want to be part of that session. Click on the subscribe button so you can get notifications as soon as we come on live. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.